Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's a weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. It is comforting to see, even after the falls in late September, maybe even because of those eventually restricted falls, that the market is still keeping within the broken May to October 2020 bullish shift pitchfork. Prices had since August moved down from the upper time, currently 24.49, through the middle time, currently 22.79, all the way to the lower time, currently 21.09, being halted to a great degree by the combination of the slowly rising long moving average, currently 21.60, and the big 50% Fibonacci lines of the March to August move at 21.60 also, and the February 2018 to March 2020 move at 21.28. There was an attempt lower still, piercing the lower time, but without a single close below it. Hence, this was why I thought, and still think, the broken May to October bullish shift pitchfork, 2020 bullish shift pitchfork, is still ruling this market's gentle overall bullish rise. It was, as I said 3 weeks ago, and I quote, "Until that lower time is broken, the shallow, gently bullish shift pitchfork will run this market, but that may be sooner than many think, if we're not too careful." End of quote. Now, the reason for the cautious comment was the accumulation of action in mid-September to early October so close to the lower time. However, Thursday last week's combined key reversal up and bullish closing white Mariposa really turned the market around and started to move back up and into fulfilling a new pattern that has become clear because of that move higher, but which has been in operation since about early August. Before going into that pattern, I'd like to reprise a portion of last week's commentary when I showed some caution about this move higher. Please note, this was issued last Tuesday before the trigger was pulled, and that happened on last Thursday. Anyway, here it is, and I quote, "So I would be cautious about today's move up until we see at least a couple of strong consecutive closes over the medium moving average, currently 22.57, yes, and short medium moving average, currently 22.49, which has come down to reinforce the medium moving average from above." End of quote. Now, to this new pattern that is becoming clearer with this move higher, it's called a diving board pattern. With the action from, I'll describe it, with the action from early August to mid-September being the diving board, the drop from mid-September to the low of late September being the dive off the board, and the move from early October to date being the swim to the shore. It's not a common pattern, but is one that is valid and perhaps more importantly incorporates other patterns such as triangles and halfway hesitations within it. Looking at this diving board pattern and making an appropriate measurement, the initial topside target X would be in the 24.11 area, with a possible secondary topside target in the 24.63 area. As you can see, target X has almost, if actually realistically, already been achieved. Target X1 is a different scenario, requiring more work on the upside and maybe not being ultimately realistic. We'll have to wait and see on that one. LME 3-month tin. I've been repeating this here again and again for months now. Yes, the overall bullish incentive is still alive and strong here. This was and is because the original move back up, which started back in March and then translated to a higher level in April, was due to prices moving up over the middle time, currently 35.875, of the January to March bullish shift pitchfork. Prices even managed to reach up and over the upper time overhead, currently at 38.260, back in July and August, and even today. But then back then, prices had since come back within the folds of this bullish pitchfork. In all this time, this bullish pitchfork had and has driven prices higher. Admittedly, I believe that no market can head in one direction all of the time. Thus, in August, specifically on the 19th of August, the market made a major correction lower. Yes, this did not break the bullish incentive as prices were still within the bullish shift pitchfork, ably supported this time by the lower time, currently at 33.495, as well as its partner for so many months now, the rising medium moving average, currently 33,470. The second test low we saw in early September was enough to trigger an even stronger move higher, pushing up through the middle tine, currently 35,875, and peaking a little under the upper tine with a 2-day over the weekend pipe top. Well, the market dropped after this pipe top with a huge drop that pierced the lower tine, coming to a halt around the August low at 31,250 before recovering and actually not closing outside that day, but back within the original bullish shift pitchfork. So there was no close outside, even though we'd penetrated it so far. And it closed just under the recent 50% Fibonacci line at 34,040. Since then, the market's regained all of the big one-day loss and more. Prices yesterday rose up to the upper tine once again, and today, with a new all-time high, pierced the upper tine, but have since pulled back down quite dramatically. It's such that today may well be a peak, maybe not the peak, but a peak of this market, with what looks right now like a shooting star type 1 bearish pattern. Now, there is a possibility that it may turn out to be a type 2 bullish pattern, but we will not know that for certain until a few days after, say by this coming Thursday or Friday. This brings me once again to my final point, the same final point which I've repeated from previous commentaries. It is this, and I quote, "It can be hellish to rely on only one pattern, because it can be hellish when it breaks." End of quote. So, that is again where we are now. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.